Next up, income statement. Again, we are looking at Part 1, adjusting entries. So we need to do the income statement and pull the numbers right off. So what do I got? First up, fees earned. What is that number? 44,350. Correct? Okay, now I need to do expenses. So what you have to do here is they're trying to figure out if you know what an expense is or what goes into an income statement. You'll notice on here the only thing available is salaries expense, and that happens to be 3675. The next expense that shows up in the list is rent expense, and that happens to be 2400. The next expense in here is supplies, and the supplies expense is $22.75. The next one is depreciation, and I believe that's $750. Next expense, insurance expense, and that shows up at $375. We have one more expense. It's a miscellaneous expense right here. $1,400. If you noticed anything on that list, the only thing you could use would be an expense account. That total expenses should be, and this again is right off of the worksheet, $875, which gives us a net income of $33,475. So that's your income statement. Now, remember, you have to do the owner's equity. And this one I didn't like the way they set it up. In fact, it kind of confused me when I was trying to help Victoria. So I do apologize for that. They're saying they started off with 0. Then they added that $45,000 that they have in the beginning already. And now we add the net income of $33,475. And, oh boy, did I mess that one up, guys. Sorry about that. 33,475. And that comes to, oh my goodness. I don't have that one. Oh, hold on. That comes to 78,475. Now, I have to what? Subtract the withdrawals. Is that correct? And that is 12,500. And that should give us an increase of 6,976. Hold on, I'm looking at this crooked. 6,5,975. And that gives us an ending inventory of 6,5,975. That sets up the owner's equity. And we come down here, now one more time, we're going to pull off of the balance sheet. So what do we start with? And that's on the worksheet. Cash of 32,450. What's next up would be accounts receivable of 16,450. We have then supplies of 15,250. This is directly off your worksheet, guys. And then what do we have? We have prepaid rent would be the next one. If you notice, as I pull that list down, there's only one asset available in that list. And now we can do the same thing here. Office equipment, and this is short-term prepaid, right? That's our next one on our list, 4125. Gives us a total. These are current assets of 56,950. Now we're going to do plant and equipment. So equipment, the only account on there that says it's equipment is this right here, and that's 14,000. We need to look for accumulated depreciation and we have that showing up at $750. Now, we take accumulated depreciation and subtract it from the office equipment, and we will come up with a total of $13,250, right? Gives us total assets of $70,200 on this worksheet. So then we have to do our current liabilities, and that's accounts payable, and that's $1,300. We have salaries payable. Again, notice there's only one liability on there. Salaries payable is $175, and unearned fees is still out there at $27.50. Gives us a total of $4,225 for current liabilities. Our owner's equity, what is our owner's equity or our capital? $65. And that's from that owner's equity statement, $65,975. And I hope this comes to $70,200. Those are your financials. Now, do you want to check our work and see what we come up with? Let's see. Check my work. I have no idea how this is going to react. There we go. Let's see what we come up with. See if I have a mistake, guys. And I have no idea what this is doing on your end, so let's see. Of course, you got red, okay, where I didn't put in the accounts. And I forgot to select that, so that should be net income. Alright? It's very easy to miss something on this. Owner's equity is good. This is actually a capital statement, remember that. We get down to the income or the balance sheet, it's perfect, it's good. So that is financial statements. Next up is going to be the closings now. So let's